Good morning and welcome to the first area Securities Markets update for this week, and we will start our video with a look at the concerning news that came out from the UK during the weekend. The recent media polls showed that the separatists are leading with a 51% for the first time, which increased the fears about the official referendum which will take place next week. And as a result of this news, the British pound began the week sharply lower. The pair began the week with a gap down lower toward 1.6190s, reaching as low as 1.6160s after closing the week around 1.6327. Meanwhile, further declines could be seen in the British pound until the official referendum results are released. A yes vote would lead to another wave of or another heavy selling waves, which may lead the British pound to drop below 1.60 for now, while any no vote would wake up the bulls again. Finally, this week's fundamentals from the UK are unlikely to help the pair to stabilize as well. As far as the media polls keep supporting the separatists, the further declines could be seen. As for the Asian session today, a collection of economic figures were released from Japan and China, which had a slight impact on the markets. Beginning with Japan, the current account surplus eased back for the second month in a row, declining to 0.10 trillion yen in July, down from 0.13 trillion yen in June, despite the fact that it had been anticipated to increase or to widen further to 0.18 trillion yen. Furthermore, the second quarter final GDP came in with another downward revision, showing a shrinking of minus 1.8%, comparing to initial reading of 1.7 or minus of a shrinking of minus 1.7. In China, the trade balance surplus came in with another surprise and increased to another record high of 49.8 billion in August, up from 47.3 billion, despite the fact that the estimates were to decline to 40.8 billion. Exports increased by 9.4%, while the estimate also were to rise by 9% only. And finally, the imports fell by 2.4%, while it had been anticipated to rise by 3%, and which is also the second monthly decline in a row and the biggest monthly decline since March of this year. Going forward to the European session today, there are some economic figures will be released from Switzerland, Germany and the UK, which may have a slight impact on the markets. In Switzerland, the unemployment rate is expected to remain stable at 3.2% in August. Switzerland also, deflation likely to deepen further, as the consumer price index is expected to decline by 0.1% in August, comparing to a decline of 0.4% in July, which would be also the third monthly decline in a row. However, the year-over-year CPI is likely to remain unchanged. Finally, the year-over-year retail sales also in Switzerland is expected to rise by 3.7% in July, comparing to a rise of 3.4%, which would be the second monthly increase in a row. In Germany, the trade balance surplus is expected to widen further to 17.3 billion euros in August, up from 16.2 billion euros in July. Finally, in the UK, the Halifax House Price Index is expected to rise by 0.2 in August, comparing to a rise of 1.4% in July, which also would be the second monthly increase in a row. As for the US session today, there is only one economic figure will be released from Canada. The building permits is expected to decline by 4.2% in July, comparing to a sharp rise of 13.5% in June, which would be the first monthly decline since 3 months. This is it for today. You can follow us on our social media sites, Twitter, Facebook and YouTube, to get the latest economic releases, reports and analysis. Thank you for watching.